Assalamualaikum and a very good morning and back to our medium. We are from Group 4 and for today we would like to present to you about summary and overview of Mfrs 138 Intangible Asset.
Intangible asset can be defined as identifiable non-monetary asset that has no physical substance but are expected to benefit the company for more than 1 year. For example, computer software. Computer software is a collection of computer programs, procedures and documentation that perform some tasks on a computer system. There are characteristics of intangible asset which are identifiability, which means capable of being separated or removed from this entity and sold. Secondly, control. Control is present when the entity has the power to obtain future economic benefit flowing from the underlying resource. And thirdly, future economic benefit may arise from the sale of product or service, cost saving or renting of the asset. An intangible is recognized when it is relevant, which means meet the definition of an intangible asset, and faithful representation, which means it is probable that the expected future economic benefit that are attributable to the asset will flow to the entity, and the cost of the asset can be measured reliably. For initial measurement, an intangible asset should be measured initially at cost. Cost of an intangible asset is determined depend on the four situations. First, separate acquisition. Its cost comprise its purchase price and any direct cost incurred in preparing the asset for its intended use. And then second, business combination. Its cost is the fair value at the date of acquisition. And then for the government grant, when the grant is recorded at fair value or a nominal amount plus any direct expenses incurred in preparing the asset for its intended use. And then lastly, exchange of asset. Its cost is the fair value unless the exchange transaction lacks commercial substance or the fair value cannot be measured reliably. Then it is measured at the carrying amount of the intangible asset given up. Any gain or loss is recognized in the income statement.
So let's move on with useful life of an intangible asset. It is divided by two, finite life and infinite life. For finite life, the intangible asset will be amortized based on its useful life, and the amortized expense will be recorded in a statement of profit or loss. For infinite life, the intangible asset should not be amortized but will be tested for impairment. This asset did not have useful life, and the impairment is done annually or whenever there are indication of impairment. The impairment can be detected when recoverable amount of an intangible asset is less than carrying amount, so it will then be create impairment loss. For subsequent measurement, they are divided by two, which is cost model and revaluation model. For cost model, intangible asset that has finite useful life will be carried at cost, less with accumulated amortization and any accumulated impairment loss. The asset will be amortized systematically over its finite useful life. Based on definition, we can already get a formula: cost less with accumulated amortization and less with accumulated impairment loss. Continue with revaluation model. This intangible asset is shown at a revalued amount, which is its fair value at the date of revaluation, less with any subsequent accumulated amortization and any subsequent impairment loss. Fair value of an intangible asset is measured by the reference to an active market. Based on revaluation model, we're gonna get two things, which is surplus on revaluation and deficit on revaluation. How to detect surplus? It happens when fair value exceeds the carrying amount of an asset. So we have to record it in statement of profit or loss and statement of changes in equity. For deficit on revaluation, it is happen when fair value decreases or less than the carrying amount of an asset. It is treated as an expense and it must be recorded in statement of profit or loss. Let's move on to internally generated intangible asset. The example of this kind of asset is generated brands, masthead, publishing titles, and also customer list. Alright, this kind of asset cannot be recognized as intangible asset because it is not identifiable, cannot be controlled, it is also cannot be measured reliably, and it also cannot be distinguished from the cost of developing the business as a whole.
Next, internally generated research and development. The recognition criteria are the same as the other intangible assets. However, we must first classify these into research phase and development phase. Research phase is where an investigation is done to obtain new knowledge. Any expenditure incurred in the research phase will be written off as an expense in the statement of profit or loss. This is because it is still uncertain that there will be any revenue generated from the future product. While the development phase is where the research findings and the other knowledge will be applied. It is further advanced than the research phase. The cost will be capitalized as an asset in the statement of financial position if the entity has the intention to complete the intangible asset for it to be used or sold, and the other criteria also should be met. The journal entries will be debit intangible asset, research and development, credit cash or bank. Lastly, disclosure of intangible assets. At the beginning of the year, the carrying amount will be calculated by subtracting the cost with the accumulated amortization. At the end of the year, the impairment loss and the amortization expense will be deducted to find the amount that should be disclosed in the statement of financial position and the statement of profit or loss as shown here. I think that will conclude the summary of Mfrs 138 Intangible Assets from us Group 4. Thank you.